This week in the markets, tech pushed higher, oil surged hard, and the usual rules didn't quite apply. Let's break it down, clearly, simply, and from a trader's perspective.
Markets finished the week broadly, risk on, but not across the board. US tech led the move, crypto followed, but under the surface things were a bit more complicated. The big driver, crude oil, pushed higher on geopolitical supply concerns, particularly around the Strait of Hormuz. Now here's where it gets interesting. Despite that uncertainty, gold fell and silver dropped. That tells us one thing: markets weren't behaving in a textbook way. Let's keep this simple. The standout moves this week: Nasdaq up just over 3%, Amazon up nearly 6%, Nvidia strong again, Bitcoin up around 4.5%, but FTSE down over 2%, Tesla down over 6%, silver dropping nearly 5%, and the biggest move of all, crude oil up over 7%. This wasn't a clean risk-on week. It was selective risk-on. Tech was strong, energy was strong, but not everything participated. That matters because it tells you can't and don't assume correlation. Don't assume everything moves together. Three main drivers this week. One, geopolitics. The Strait of Hormuz disruption is key. Around 13 million barrels per day flow through there. Any disruption, oil moves, inflation risk increases. Two, inflation sensitivity. Higher oil equals potential inflation pressure, and that feeds straight into central bank decisions and interest rate expectation. Three, central banks ahead. Now this is where traders need to pay attention. Next week is heavy. Federal Reserve, Bank of England, ECB, Bank of Japan, Bank of Canada. Let me say this clearly. You can have the perfect setup, and one sentence from a central banker wipes it out. So discipline matters. Let's bring this back to what actually matters. Where is price? US indices still strong, Nasdaq leading, but price is extended. That means chasing is not a strategy. FTSE weak relative to the US. That divergence is worth watching. Gold and silver not acting like safe havens, so don't assume. Read the chart. Oil strong trend, but again extended markets reduce reward to risk. FX dollar steady overall, nothing extreme, which fits with markets waiting for central bank direction. Next week is not about guessing, it's about preparation. Key events: Fed rate decision, Bank of England, ECB, US GDP, US PCE inflation, and China PMI. This is a high volatility environment. Let's bring this back to practical trading. One, oil is the key driver. If oil stays elevated, inflation stays relevant. Two, tech is leading, but don't chase strong trends, don't mean good entries. Three, gold is not behaving normally, so don't rely on assumptions. Four, volatility is coming low. VIX now doesn't mean low volatility. Next week. Five, location over prediction. This is the big one. You don't need to predict the news. You need to know where price is, where your levels are, where your risk sits. Going into next week, we're not looking to chase markets. We're waiting for price to come to us because that's where real opportunity sits. If you want to take this further, start mapping your higher time frame supply and demand zones. That's where this becomes actionable. If you found this useful, like, share, and subscribe. It helps more traders see structured, process-driven education. And as always, trade well, and thank you for watching.